On the Express this week, the Fed's message from the mountains heard round the world. Will the rate drop rally be for real? I'm taking you inside Investfest, the biggest, baddest wealth festival on the planet, the Investopedia indicator, and what to watch this week. You're rocking with the best if you ride the Investopedia Express. Welcome back and welcome aboard, and hello to all of our viewers, listeners, and fans around the world. We know you're out there. Good to be back with you on the Investopedia Express on a Monday morning. We are live on all platforms and then on demand on your favorite podcast platform. So tune in, chime in. We love to hear from you. What's up, Global King? Hey, thank you. Welcome back. Good to see you again. Please join the conversation. Drop in your comments. We love hearing from you from all over the world. India, Pakistan, Taiwan, Brazil, Costa Rica, Mexico, Indianapolis, of course, all over the place. We love it. This is the Investopedia Express, and we're going to get down to business. Markets slipping a little bit from those Friday highs after the Fed meeting up in Jackson Hole, Wyoming. We'll get to that in a second, but a few headlines this morning. Be a pepper. You want to be a Pepper? How about Dr. Pepper making a huge acquisition this morning, buying Dutch coffee company JDE Peet's. They make that Peet's coffee, if you like that Peet's, in an $18 billion deal. Hey, when was the last time you had a Dr. Pepper? Pretty good, actually. It's been a minute, but it's always satisfying. And now Dr. Pepper getting into the coffee game. Keurig, of course, Dr. Pepper Keurig, now buying Peet's and growing its coffee empire. It's not just soft drinks anymore. It's all about that coffee. And would you like some chips with that? Intel shares popping this morning after news that the White House, the government, is taking a 10% stake for some $8.9 billion to prop up one of America's oldest chip makers. What would Andy Grove, the founder of Intel, say to that? Furthermore, this doesn't seem very Republican. The White House, our administration buying their way into public companies, that's not the GOP way. Well, the GOP way is not the way anymore for this administration. They do things their way, and when there's money to be made, they are making that money and getting involved in chip making here, trying to return the United States to its chip making prowess after years and years of falling behind groups like Taiwan Semiconductor, except for NVIDIA, of course. So another move of the United States government getting more involved in the private sector. That has been the theme for this administration over the past several months. We see it from everywhere, from the White House telling Coca-Cola what to put in its special syrup to now taking a 10% stake in Intel. But investors are looking way beyond that. They're looking at the prospect for lower interest rates, and they heard what they wanted to hear finally from the hilltops and the mountaintops of the Grand Tetons in Jackson Hole, Wyoming.
Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Finally, Fed Chair Powell speaking at the Fed's Jackson Hole Symposium last Friday, giving that much-awaited policy speech. And now the prospect for a Fed cut, even if it's a small one, if you look at the CME's Fed Watch tool, one of my favorite tools out there, about 87% that will probably get a rate cut at the Fed's next meeting, September 16th and 17th, and maybe another one after that at the in the November meeting. And then we'll see what happens. But if you look at the prospect for lower interest rates, and that's what investors are focusing on, they're looking right at that. The higher those odds go, the more likely we'll get a Fed rate cut. But now the big question is, what happens to the stock market, which has been dancing around record highs when you get a rate cut? Usually you get a rate cut when the economy's slipping. But look, Dow Industrial is hitting a record high last week on Friday after that news, popping about 800 points. And now you have the Dow, the S&P 500, the NASDAQ, all sort of dancing around record highs. That is the sign, my friends, of a healthy trend, a healthy bull market. And we've been talking about this. The skew index, we talked about it last week. You got more advancers than decliners. You got good market breadth. You got sectors, not just big tech, not just AI, but all bunch of sectors rallying, including financials. That's a pretty healthy sign as well. But when Papa Dow speaks, as my friend JC Peretz likes to say, we better listen. So what does happen when the Fed finally cuts rates, especially when markets are near record highs? You'd think the market would slip because it's a sign that the economy's slowing. And guess what? The economy is slowing. But according to our good buddy Ryan Dietrich at the Carson Group, who makes these great charts for us, hard to read. I'll read it for you. Look at that green on the right side. When the Fed cuts rates, when markets are close to record highs, the market usually goes on to make more record highs. It usually rallies after that. So it's not like careful what you wish for in this case. Sometimes when the economy is super weak, when the markets are super weak and the Fed cuts, you get a little bit of a bump. But if you look at the long-term prospects, 6 months out, 12 months out, market's usually higher when that Fed starts that rate cutting cycle, even when it's been around record highs. But we know there's a lot of other things going on right now in the economy. We got finally tariffs making their way into our economy. But this is one I want us all to focus on. It's going to require a little Latin explanation here. You may remember back at the end of July, the White House threw an executive order saying that they will get rid of the de minimis exemption for trade, for commercial shipments. What's the de minimis exemption? Well, let's go back to Latin class, my friends, because that means de minimis means nothing's too small to trifle with. But in tariff talk, de minimis means any product shipped, imported into the United States that's less than $800 goes without a tariff. And if you want the real Latin on that, it's de minimis non curat lex, too small to be of significance, or as my mom likes to say, fly poop in black pepper. And so for the last 10 years, the de minimis exemption has really allowed e-commerce companies like the Temus of the world and the Shines of the world to ship product into the United States. Either it's for small businesses or it's components or it's finished product that's less than $800 with zero tariff. Well, the White House getting rid of that, and it goes into effect today. And we have countries around the world who've decided not to actually put business shipments on boats, on planes towards the United States that fall under the de minimis exemption, because nobody knows who's collecting this tariff, when it's being collected, and where that money is going. So you have companies like DHL in particular in Europe, big shipper in Europe, saying we are not going to ship business products under $800 to the United States until this is more clear. And other countries are threatening to do the same. And that could really be the impact we finally feel as consumers of this tariff policy, because a lot of the products that we bring in as consumers, as small businesses, are less than $800. In fact, the average price is around $54 when you think about all the e-commerce ordering that we do. And this is the way that it's going to work, according to the Trump administration. $80 tariff on countries that have a tariff rate of less than 16%, $160 for countries that have tariff rates between 16% and 25%, and a $200 added tariff to countries that have a 25% and above tariff rate. So if you're importing macadamia nuts from Brazil, which has a 50% tariff rate, or if you're importing textiles from India, which has a 35% tariff rate, you're going to end up paying an extra $200 on any products that are under $800. And that could have finally a big impact on what we pay as consumers. We got the Yale Budget Lab estimating that's going to cost families about $155 extra per year. It doesn't sound like a lot, but it could add up over time. And if you're a small business, you are going to feel this absolutely. So finally, we're getting the impact of tariffs, and that, remember your Latin. When people ask you what the de minimis exemption is, it is too small to be of significance. In this case, it is very significant. All right, let's get to our drop-in this week. No live guests, but I had the pleasure of being down at Investfest, the world's biggest, baddest wealth festival on the planet, put on by my friends at Earn Your Leisure and Steve Harvey Global Productions. The biggest wealth festival in the world, happens every year in Atlanta, Georgia. This was the 5th year. Let's get to it with the drop-in. Yeah, there's nothing like Investfest in Atlanta, Georgia, every year at the Georgia World Congress Center. We got DJs. We got 25,000 people pouring in to the Georgia World Congress Center to hear from legends like Magic Johnson and Steve Harvey himself, and celebrities of that nature, rap groups. We had Charlemagne the God was there, incredible list of guests. And I got to speak there and moderate a few panels with our friends at Invesco QQQ, and moderate a panel on managing business empires. And there's nothing quite like it. I can tell you that. I've almost lost my voice there, but I always learn so much when I go there, and I get to share with so many people about what's happening, how to create wealth today. This is a passionate group of people. So I was there. I got my picture on the picture block down below there. A little low for my taste, but I'm there with my buddy Jay Williams and other celebrities as a part of this great gathering, and that's always a lot of fun. But I learned so much when I talked to folks. Here's my friend Austin Haynes. He teaches crypto for EYL, Earn Your Leisure University, talking about what he's doing down at Investfest.
Austin Haynes. I'm from South Jersey. I'm born and raised in Morristown.
What are you doing here at Investfest?
I'm educating retail and institutions on the cryptocurrency space.
How have you seen the pickup in crypto among the retail crowd, especially in this community? I know there's some skepticism, but there's also some early adopters.
There was a lot of skepticism, but I've been able to sit down and talk to people individually, one-on-one, and help break that barrier, because there's a lot of myths and misconceptions in the cryptocurrency space.
What are the biggest misconceptions you think people have?
A lot of misconceptions are volatility. People think that volatility is all crypto is about, but any new asset class that comes around, there will be inherent volatility. And the last new asset class that actually come about was emerging markets in the 80s and the 90s. And now we have cryptocurrency coming about, and institutions are actively documenting that Bitcoin is less volatile than some of people's favorite Magnificent Seven stocks, being Nvidia and Tesla.
If you're like me, people are coming up to you all weekend long saying, how should I start investing? Where should I start investing? As it relates to crypto, what would you tell the retail crowd, especially those that don't have a lot of experience?
What I would tell the retail crowd is to look up the definitions first, because if you want to do any research, you have to know what everything means. What's a blockchain? What is crypto? What is a stable coin? What is tokenization? And then once you do that, you can go into buy something, because no one should buy something and not understand the space.
Yeah, know what you own. Know what you own. My buddy there, Austin Haynes from EYL University, dropping some knowledge there. And this is another great individual I got to meet this weekend, Chris Saim. He's up in Grand Rapids, Michigan. He was on his way to becoming a professional athlete at Michigan State University years ago. Didn't work out for him, but he pivoted, and there was so much conversation, so much learning about how to change your game if the game doesn't work out in your favor. This is a guy who was going to make it, or thought he was going to make it, but turned into a motivator, turned into a financial educator, a bird of a feather just like us, doing great work in Grand Rapids, teaching young people through faith and through financial education how to really change their life and build wealth and improve their situation. It was really great to get to know Chris, got to speak on a panel with him, Jay Williams and Renee Montgomery, the owner of the Atlanta Dream there, and listen to what Chris had to say. Tell me your name and where you're from.
Chris Saim from Grand Rapids, Michigan.
All right, Chris, you have had an unusual but unbelievable journey from being a one-time athlete to becoming a brand in and of yourself. Tell us your quick story about what you were trying to do and then what you ended up manifesting.
For me, sports was the gateway that took me on a path to fast track to success. What ended up happening was I fell in love with the finance portion of it when my athletic career came to an end, because I was inspired by the fact that we make all this money for the athletes to actually make it, but 3 to 5 years after our playing career ends, many go broke. That took me down a rabbit hole to learn everything I needed to learn, to read all the books that I needed to read, to learn how the 1% think and go about managing their money, to avoid that, to build generational wealth, to build legacy. And so for me, I end up taking those small steps as a young athlete at Michigan State. And although my playing career didn't go how I wanted it to go, I was building the building blocks for success later on down the road. Fast forward to today, and now we have one of the largest social media platforms that overlooked, and that underdog athlete that didn't get that chance, but that still knows they have more purpose in them. And so, Caleb, that's what we've been on a journey for doing for so long now.
When did the investing light bulb go off for you? Do you remember that moment where you were like, wait, this is how money is actually made? And what were your first steps?
Absolutely. When I got out of college, I graduated with a master's degree. I went to work at Notre Dame with high-profile student athletes, and they only assigned me ones that can go to the league. So think about those guys that you know from those institutions. What happened was, a couple years into the job, I started thinking to myself, how could I grow my own wealth? They're going to sign contracts that makes them millionaires overnight, but how can I do the same off a regular salary? And so I took the 60,000 I was making and just began to make smart financial decisions consistently over time that led to where we're at today.
For those athletes or student athletes that think that they are going to be able to take that step, but chances are really thin, what would you tell them in terms of investing in themselves for the future, that other thing that they should be looking at?
Man, it starts with investing in yourself. The one thing you want to do is understand the belief in yourself is going to be greater, that you got to have, that nobody else is going to have. And so if you don't understand that everything you have is already within you, then you're not going to get there to begin with. But if you can start early, if you can be in it for the long haul and for the right reasons, it will lead to overall success.
Yeah, Chris, such an inspirational guy. You should check out his YouTube channel. He's built a massive YouTube channel teaching people, especially young people, how to turn their lives around, how to focus on investing in themselves, and how to actually start investing to build wealth, real generational wealth. And I met so many people like that over the weekend at Investfest, and the love is so real there. People coming up to me and thanking Investopedia for helping them out along the way. And so many good teachers there. One gentleman I got the pleasure of interviewing was Cedric Nash. You might know him as your millionaire mentor. He wrote the book Millionaire Moves, among other books, and a real inspirational guy. Here's a few minutes I got to spend with Cedric Nash, and definitely check him out on the socials as well. Cedric, thanks so much for taking the time. You've built a big business. You've been in a lot of businesses, but investing has been a core part of your development as a professional, but also as an empire builder of your own. So how important is the investing part, and when did you learn that that's what you needed to do to build your own wealth?
The investing part is so important. Is because, like you've heard me say before, entrepreneurship is a big experiment. You never know how successful you're going to really be. You can't really predict it, no matter how much research you do. So as your business is growing, you always got to put some money aside and kind of put that on its own path as well. So, I learned that from my millionaire mentors. I talk about them often. I had 4 that really got me going, but then throughout my years, I've collected probably 50 or 60 other mentors along the way. And I've learned from every last one of them. And you've kind of got a sense of my personality. I'm not shy. So I'm going to ask, and I'm going to learn, and I'm going to implement. And so that's really where I got that from, that I needed to continue to invest regardless of how successful my business was.
And when I say we, financial media, financial services, we may have overcomplicated investing for a lot of people, especially for retail investors. But at the end of the day, there's some very simple principles that you've sort of adhered to and you help teach, and that we try to teach at Investopedia. What are your core sort of basic rules for just making sure that you're doing it right without overextending yourself?
I love that. I think what I've learned from what I've read and what I've actually done is that, first of all, invest regularly in small pieces over time. Whether it's a piece of your paycheck or a distribution from your business, keep it extremely diversified. Diversification is what's going to save you. Dollar cost average, so you don't have to worry about if I bought it at the right time or the wrong time. Also focus on super high quality, what I call multi-dimensional assets that has value based on not just because it's high in revenue or because of their products, but they have inventory. They have a strong balance statement, great management, super quality firms, and build a portfolio across multiple industries. That's what I learned. It's just keep it simple. Also, index funds does a lot of that for you anyway.
Yeah, dividends too, right?
Oh,
Companies that
dividends,
pay dividends.
exactly.
How important is that? A lot of people don't realize that you're getting paid anyway, no matter if the stock goes up or down. But if you are a smart dividend investor, that can mean some serious compounding, right?
Exactly. Those dividend aristocrats, right, who consistently improve or increase their amount of dividends over time. It's just so vital. And a lot of people get turned off on dividends investing because sometimes the stock doesn't go up sharply, but you're buying very, very high quality companies, and you're sharing the profit in with them. And so I think that your portfolio should have a good portion of that. And that's what I'm trying to get to my community to understand. We don't have to all be in cryptocurrency. We don't have to all invest in IPOs or the latest technology firm. You can put a little money in that, but there's a lot of just well-established businesses that you can invest in that always finds a way to win.
That's absolutely true. But also, you and I have been talking about the fact that as you start a business, if you are running a business, or if you have equity in places like a home, you've done this where you've taken some of that equity and put it to work to earn a better rate of return in the stock market. I'm a risk averse guy. That would be very terrifying for somebody like me. But why Why did that work for you? Why do you think that's a good idea?
I really didn't take it out to basically invest in the stock market. Usually the money I put in the stock market usually comes out of profit distributions from my business or from, my paycheck. But I have used equity out of my home to invest in multifamily properties and invest in commercial properties. And that's really kind of how I got started there. I invested in an area that I'm pretty sure you're all too familiar with, which is Jersey City back in 2002, 2003. So, the way I look at real estate, I analyze real estate. I understand the cap rates. I understand the probability of winning, and that's a good bet. And I tell people, even in my book, don't touch the equity in your home unless you're going to invest in something that you are 99.9% or probably 110% sure that you're going to be able to make that return back and pay that money back. If you find something like that, then it's worthwhile. Other than that, don't touch it.
I would love to know, going out on this, Cedric Nash's idea of a really diversified portfolio for 2025. What does that look like today?
Oh, I think it's, it's a great question. My diversified portfolio for 2025 is the same diversified portfolio I would have had in 2020 and in 2000. Invest across the top industries in the world. Keep it crazy diversified. I always tell people in my community that your portfolio should be like a rich gumbo, right? Full of all the great ingredients, right? So that one ingredient doesn't throw off the entire batch. So my whole point is to go into tech, go into pharmaceutical, look into healthcare, look into retail, look into manufacturing, right? Look into all of these potential great industries that you believe in. Yeah, I know a lot of people want to go into AI and they think it's the hot thing and they're going to predict great winners. Yeah, go into that as well. But keep it balanced, because you'll find that that's what's been tried and true for winners, for investors that's end up winning. It was because they kept it mixed, they kept it balanced.
Cedric Nash gumbo. We're going to put that recipe on Investopedia. Thanks so much for your time.
Thank you so much. Just make sure I get my patent and my copyrights for my recipe.
Cedric Nash, what a guy. So interesting talking to him. And folks, if you want to actually hear more of these interviews or hear more of the conversations and the keynotes that were happening down at Investfest, that's all on YouTube right now. Check out Investfest on YouTube, and Earn Your Leisure has a lot of those that they streamed for people that couldn't make it down to Atlanta. But I recommend you go down to Atlanta and stop at the Waffle House. That's a must stop when you're in the South. Little Waffle House for breakfast. I needed them on Saturday and Sunday morning, and Waffle House always delivers down in Atlanta. But a big shout out to all the folks who put Investfest together. Yes, that was an amazing event, Stan the Man. Big shout out to EYL. Big shout out to the volunteers that came down to Atlanta to help out. Hey, Pharaoh, good to meet you. It was good meeting you down there at Investfest. Nice. Thanks for reaching out, Redac. DJ Focus. Yeah, thank you for coming up to me at Investfest. I met so many people. The love was so real down there. People coming up and saying hi, taking pictures, thanking Investopedia for helping get them through the early part of their investing journey or in their first job. And when I walk around Investfest, people are coming up to me left and right just to thank me. But what they don't know is I got a whole team here at Investopedia, and we've been around for 26 years that have been doing the good work. So I get a lot of the thanks, but I want to extend that thanks to my team, but also thank you all for making me feel so good down there. And I always learn a lot when I'm at Investfest in Atlanta, and I recommend you go next year because there is nothing like it. I go to a lot of wealth festivals. I go to a lot of conferences. Investfest is its own thing, the biggest and best wealth festival on the planet. Shout out to you guys at EYL for having me down there again. All right, let's get to some money in motion, because money is moving these days. Yeah, you know what's feeling the flows these days? Bonds. Investment grade bonds, especially. I'm watching the money flows into investment grade bonds lately. Check this out. This from B of A Global Research. 23 billion going into bonds last week. A lot of that is investment grade bonds. Last week was the four biggest weeks of inflows we've seen since July of 2020. Now, what was happening in July of 2020? Well, rates were coming down. Interest rates were coming down, and that means lower yields for treasuries. You look at that purple line there, that is investment grade bonds popping. Shout out to a B of A Global Research. Why are investors buying so many bonds, investment grade bonds right now when rates are heading lower? Well, you got to think of it like this. When rates are lower, interest rates are headed lower, and Chair Powell sort of indicated that they might finally be headed lower, if you're in a bond manager, if you're a bond portfolio manager, or if you have fixed income in your portfolio, you still have to get yield. And the yield between investment grade bonds is higher than that of US Treasuries, which are considered to be the safest risk-free rate of return. So you're looking for yield, and money, my friends, is like smoke. It's always looking for higher ground or a higher yield. That's why you've seen these big inflows into investment grade bonds lately. And investment grade bonds are generally safer than high yield bonds or riskier bonds. So that's why you're seeing this move. And you're seeing, again, this bubble up, this melt up of assets, stocks near record highs, bonds, especially investment grade bonds, popping up again, crypto coming off of its highs, but still kind of bubbly up there. It is a pure melt up in asset classes. And a lot of that has to do with the fact that rates may be coming down in the next few weeks. We'll keep an eye on that. All right, let's get set up for a busy week ahead. What's coming on down the tracks? It's the last unofficial week of summer. We got Labor Day coming up a week from today, but plenty going on this week. And NVIDIA is front and center on the menu. But let's go through the week today. Monday, new home sales coming out this morning for the month of July. They were terrible. New home sales have been terrible for a long time. But finally, with rates coming down, maybe we'll have a little bit of a fall awakening for the real estate market. We'll keep a close eye on that. Tuesday, tomorrow, consumer confidence for the month of August. That was getting better after dropping pretty low during the middle of the spring. It's been on the uptick lately. We'll also get the S&P Case-Shiller home price index for the month of June. Home prices are high, but nobody's selling or buying right now. Earnings coming out on Tuesday from MDB and Okta, and on Wednesday, NVIDIA, folks. Circle Wednesday in your calendar. NVIDIA earnings are like bigger than a Fed meeting these days. It's more important than a Fed meeting. It's more important than an unemployment report. It is what people are focusing on because NVIDIA, the biggest stock in the stock market today. We'll also hear from CrowdStrike on Wednesday. And well, on Thursday, GDP second quarter first revisions. We know that growth was around 3%. We'll see if that gets revised downward like that jobs report was revised downward. That might have an impact on that. We'll keep a close eye on that. Earnings from Dell, Dollar General, and Affirm Holdings. Friday, the Fed's preferred gauge of inflation, the personal consumption expenditures index. Expect to see that number creeping up to the 2.8, 2.9 mark. And that might, again, make the case for the Fed to make that cut finally on September 17th. Consumer sentiment for the month of August coming out. And then the U.S. trade balance on Friday. I think as we've seen over the last few months, that U.S. trade balance is shifting. These tariffs or the threat of tariffs are taking their effect. And the U.S. Treasury is taking in quite a bit of money at the border and the customs offices these days with all that tariff money coming in. So we'll see what the trade balance looks like on Friday. But a busy week as we wrap up the last unofficial week of summer. That's right, Double Dot Smith. NVIDIA earnings this week. Buckle up because we know so many people are going to be focused on that. And there's so much pressure on that company, right? Hey, I'm glad you stumbled into here as well, Nazir. Good to see you here. Stubbled, that's a new word. Intel stocks, yeah. Denishir 17. Intel stocks popping because the government now owns a little piece of Intel. Intel inside, the government's inside Intel right now. Is that even legal for the government to get involved? Legal for this government, apparently. And yeah, it is legal. And we've seen it before. And we'll see it again. We've seen the government seize companies outright. But when you finally see a company propping up an industry like the semiconductor industry, it's a whole different ballgame. It's very possible that could be appropriate to lower rates. Yes, Double Dot Smith. That's what the chairman said. It could be appropriate to adjust interest rates. How can you get books to read at home? Manasseh is asking on related to financials and accounting. Hey, check Investopedia out. We got a lot of book recommendations on how to read financial statements, how to read accounting statements. But there's a lot of good organizations out there that can help you as well. So we're glad that you're studying, glad that you're learning. You got to learn if you want to earn. All right, let's get to our indicator for the week because, my friends, SPACs are back. Act accordingly. We've been keeping a close eye on SPACs, those special purpose acquisition companies that were so very popular in 2020 and 2021. And we have the definition there. They're called shell companies. That's why we have that funny illustration with the big tortoise. Shell companies that are merged with a public company, with another company to finally go public. And these are what they call blank check companies because investors put blank checks into these companies to merge with another company to eventually go public. But if they can't find a company to go public with, they have to give the money back. But we know that SPAC activity was so hot back in 2021, 2022, where we saw companies like Digital World, Trump's holding company, the Acquisition Corp go public. We saw Virgin Galactic go public through a SPAC. SoFi went public through a SPAC. And most of those SPACs, except for a few of those, didn't do so well. But we see that activity coming back as risk is on, as rates are lower, and as regulation gets eased a little bit. We are seeing a lot more SPACs come back to the market. And I would handle these with care. Make sure you are wearing gloves if you're thinking about investing in SPACs, because about 80 to 90% of them don't do very well. And that's something to keep a very close eye on. When you know SPACs are back, you know risk is on. We talked about IPOs last week. SPACs is the riskier version of that. All right. Again, what a week and what a weekend. There's your SPAC index right there. That's exactly what happened at the end of 2021. The race to zero for so many of those SPACs. Now, a few of them are still around, including SoFi and others, and Digital World Acquisition Corp, but most of them don't make it. And if they can't find a company to buy or merge with, they do have to give the money back. So like I said, SPACs are a pure sign of risk. That's your indicator for the week. And that is the Investopedia Express for the week, streaming live every Monday at 10 a.m. Eastern Time. Got a new deck. Check out the Investopedia Express deck. Just came in the mail. Excited to put some wheels on that bad boy and try not to break my arm riding it, but excited to have you in the collection. I'm like the guitar guy. Can't stop collecting skateboards, except I don't collect guitars. I collect decks. And here's our latest version. Thank you all for tuning in again. We're live here every Monday morning. And a big shout out again to all the friends I met and got to say hello to at Investfest over the weekend. Check out my Instagram at Caleb Silver. Plenty more photos and stories there. And check out the EYL and Investfest tags on social media. Great meeting all you folks down there in Atlanta. And thank you all for tuning in to the Investopedia Express live every Monday and on demand on your favorite podcast platforms. Thanks for checking in, and we will talk again a little further on down the line.